guys.
Good morning, good afternoon, good evening to all that are listening to me today. First of all, I want to thank Tradefox and its affiliates for putting an excellent conference together. I just want to give a big applaud to Chris Yarp and his team for putting this event. It is essential for these type of conferences, especially during COVID time. As we all know, things have dramatically changed since the beginning of COVID. The way we interact with people, the way we do business, the way we communicate with each other, even the way of having a conference virtually signifies how much of a change that we have endured since the beginning of January 2020. With all the travel restrictions that are in place, what better way to communicate with colleagues and friends virtually? Services like Tradefox are essential these days to validate buyers and sellers more, and we contribute to the service is going to be helpful to make our trade easier. Tradefox service is very unique. It is a must-have for our industry. It's a unique platform that supports buyers and sellers and exchange information so that we are safe in making a trade. What a year 2020 has been. None of us in our lifetime has experienced anything like this. The best thing about human being is we figure out a way to overcome all the challenges that are put forth in front of us. We adapt, we change, and we move on. Changes are not comfortable, but companies that adapt to changes are more resilient when it comes to challenging market conditions. I believe every crisis brings opportunity, and we need to seize that moment and rise up to the top. Our company. I want to give a brief introduction about myself and company EG Metals. My name is Danny Jones, president of EG Metals. Inc. We are a trading firm based in USA, mainly dealing in non-ferrous, ferrous, e-scrap, and primary metals. We have our presence in the US, Mexico, China, India, and we've been in the business since 2001. Mostly exporting from US, Canada, Latin America into Southeast Asia, Far East, and Europe. We're looking for trusted suppliers and buyers from around the globe to work closely to improve our business. Today's topic. Today I want to talk on topic of risk management. What is risk management? How we can implement proper risk management in our trade. Many of us has been in the business for a long period of times, have experienced many challenges. We have gone through financial crisis in 2008. We have gone through commodity prices collapse in 2014 and 15. And 2020 was something none of us have ever experienced, COVID. These events continue to occur. As businesses, the best practice is to analyze all trades, making sure we are mitigating the risk prior to trades. As our company has once again had to navigate through the very challenging time during the lockdown, this experience have taught us to review our risk management process once again and making sure all our trades are gone through our internal process of qualification. I want to point out the flow chart that breaks down our process to identify the risk within our business. if you look on the left side, we have identified 4 major risk management in the business. One is finance. Second is commodity sales and procurement. Third one is commodity risk management. And fourth is accounting. And to the left, we have procurement and sales, logistics, risk management, compliance and risk reporting, settlement. So I just want to break down from left to right what a quick breakdown on that and that we have identified in our business. Financials. First category that we are looking at is finance. Finance, the procurement, sales, and logistic. So under that, we have identified forecasting is a major part of that. Profitability of the trade. First, we're going to look at if that trade is going to be profitable or not. Then second is we would identify the finance for that trade, the financing costs and the costs that are associated with that trade. Then we move on to the next step of the process is contract commodity pricing. So we analyze the price that we purchased the product and we issue the contract, making sure everything is in place. Purchase agreement with the supplier, terms of the contract, quality and quantity. Then we move on to the next, which is orders. So we issue POs and SOs, terms of the order, CNF, CIF, or FAS basis. Then we move on to the last category in that we identified as credit management. What are our payment terms? LC, DP, or TT, advance payment that is supposed to be received, insurance, qualifying, credit, determining their credit facility, how much credit are we willing to offer them and on what basis? Now we're going to move on to the next side, which is risk management on the left again. We have created our risk management policy internally. Every transaction has to fit in within our risk policy management. I strongly urge every company to have its own risk management policy. What happens when at times are good, we tend to ignore these policies and not follow through. But when catastrophe or crisis comes, we find it difficult to manage the risk and tend to lose our capital investment. The next step is defining the risk profile. You have to define the risk profile within that risk policy. And the step after that is reviewing the risk review that you're taking on the trade and that you're going to make. Basically, you're reviewing the risk that you're taking. After that, the next category is transportation delivery, making sure that securing booking and containers to move the product to the destination. making sure our forecast and shipping prices fit in within our budget, and managing that risk of price increases. After that comes exposure management. The way we manage exposure is by doing back-to-back sales. We try to do majority of our trade this way so that we're not exposed to the market conditions or fluctuations. And also, we do hedging on the commodity market, hence eliminating our risk, which is identified as hedge management. Also, hedging has its own risk. We could be under-hedged or over-hedged. Now we have to manage both sides of the trade. Keeping up with the hedge alone is a bit of a complex. Next is to make sure that the proper paper trades are done, which means calling a broker, making the trade and documenting those trade internally. And the last step in the risk management section is paper and physical inventory, making sure that it matches up so that there's no more exposure to the trade. We're moving on to the third category, which is compliance and risk reporting. This category, we look at the commodity risk reporting based on exposure and the hedge we have in the market. And the last portion of this compliance and risk reporting is hedge efficiency and accounting, making sure we square up with our hedge both on physical and paper trading. Fourth and last category is settlement and accounting. If you're selling on hedge accounting, making sure that provisional invoices are issued correctly, making sure any advances we paid based on the provisional, then whether we're plus or minus based on the hedge, making sure that the differentials of the invoices are issued. Then we move on to the settlement side of the transaction. We can look at the accounts receivable, making sure that payments are received and our payables are done. In the final stage is booking the sale and in the general ledger. So I've shown a full and complete overview of our transactions from beginning to end. Many times we overlook these steps. And if any of these steps are missed or not addressed properly, we put our transaction in jeopardy. These things are simple and basic in all trades, but we tend to overlook many of the warning signs. That's in front of us when we're doing this business. To avoid problems, it's always good to follow the best practices so that you're not running into any issues with trade later on. The key in all this is protecting your capital investment, making sure your capital investment is secure. The second category I want to talk today is identifying the source of risk in our business. We have identified 11 sources of risk in our business, and we have divided them into 4 different groups or risk category. I want to go through the 11 sources of risk in the business that we have identified. Quality problem, currency fluctuation, logistic failure, forecast accuracy, supply delay, supplier performance, commodity price, catastrophe, geopolitical problems, regulations, and environmental risk. If you look at the chart, you can see the left, it says potential impact on business. If you look at the lower part of that chart, you can see the impact on the bottom category, it says low. If you look at the top of the chart, it says high. And if you look at the bottom, you can see in the low to high, it will be identified here is probability of prediction or ability to influence the business. Now we can go through and look at each category. If you look at catastrophe, that is marked as high. So for example, COVID, and when COVID happened, it was a catastrophe that we have not experienced in the last 100 years or so. A pandemic like this has never occurred to us. And that has high impact on business. Examples is we had ports shut down, we had containers being stuck, finance being halted. Everything came to a standstill, and shipping line couldn't move the container, or we couldn't receive containers, and there was delay in every aspect. So that is considered as high impact on business. So that's why you have that catastrophe is high up there. So the next one that we identified is geopolitical problems. So that is kind of the a little above midsection category. So we look at geopolitical issues that are going on currently. We can say from perspective of U.S. trade with trade war with China, that's a geopolitical issue. There we have Brexit that is happening. We have problems with India-China trade relationship that also it's a geopolitical issue that is currently happening. And also U.S. and EU trade relationship is also in jeopardy these days. So there are a lot of tensions, and any type of geopolitical issues that is happening around the globe that has an impact on our business as well. Now, we're going to go to the bottom of that chart, and you can see we put in environmental risk. In a trading aspect, environmental risk is very minimal in most cases. If you look at the environmental risk that we have seen mostly is things like having a radioactive material being shipped. In some instances, we have had experience where there was live ammunitions was shipped to other countries, and that had an impact. And maybe it could be a spill or lead items that are regulated. Those are the environmental risks that we've seen in our trade. The other category that we've identified is regulations. How are regulations going to impact us? So the prime example that we have going in the current scenario is regulations by the Chinese. The Chinese have implemented import regulations on scrap metal. that regulation have impacted our ability to ship scrap to China, and that's a disruption that we've seen because of a regulation. That also regulations can be. I mean, there are regulations that each country bring on. uh, Like for example, India also have uh, many regulations on how to import, and following through those regulations is a disruption, is a potential impact on our business. The other, the next category that we see that has effect on our business is commodity pricing. Again, having a big fluctuation on commodity price is risky because most importers are not hedging the metal. This, in fact, affect their capital investment. A lot of the importers, what happened during COVID is they're over leveraged, and and when you have over leverage and the commodity price is dropping and they're not able to recoup the funds of the previous trade from uh, their buyers, then that has a significant impact. That price fluctuation has significant impact, and commodity price fluctuation, it's huge. I mean, especially this year, if you look at the beginning of the year, then the drop that we had of about 30-40% in the second quarter, and then the third quarter and the fourth quarter, a swing of another 30-40% on. So those have tremendous amount of impact on buyers and suppliers. The other category that we have identified is supplier performance. Why is that on the top chart? So as a trader, if we have made a contract with the supplier and he's not able to supply that material, we're obligated to go and purchase that product at whatever cost. And we have to fulfill that contract to our buyer. So that is a tremendous effect on our business, and also ability to influence a business. And we're going down on the category on the lower side, supplier delay. The impact of supplier delay is not that significant. We can be delayed a month or two, but as long as they're going to deliver that product, that impact on the business is minimal. The next category, somewhat in the middle, is forecast accuracy. If you're forecasting our trade wrongly, that trade, we will have a potential loss within that trade. It depends on how much of exposure you have onto that trade. So forecasting, whether it's the metal, I mean, in our case, sometimes we forecast on precious metal side based on our previous results that we have in the past, and based on that, and sometimes there could be a significant discrepancy on the results that we are based on our forecast and what we are actually receiving based on previous trades. So trying to avoid that is a critical part of our business. Logistical failure. I mean, that also has a significant impact on our business, because if, for example, what's happening recently is if we have taken orders to China and now you found out that the shipping lines are not accepting cargo going into China, and this has big impact on our business. Either we have to cancel the contract or redirect and ship it to another country. The pricing that we agreed will not be able to match. So this is an effect that is going to have a bigger impact, and that will have an ability to influence that trade. The other issues that we see, which is a high in the is the quality problem. Quality problem is a quality is a major issue. How can we solve this with the buyer and seller? This is where we have to find a supplier and buyer who we can work closely with when we have a relationship and can continue the business without any disruption, making reasonable compromise. Basically, quality issue is a that affects us quite a bit because we have a quality problem that can drag on for a longer period of time, and it is not a good situation that we're put in, and that can have an influence on us. The last category that I want to touch is currency fluctuations. Currency fluctuation is also a big impact, especially a currency like rupee or Japanese yen and euro. These can make a big impact on that trade that we are making. If the currency fluctuation, you're almost most buyers or suppliers hedge their commodities, but not everybody is hedging on the currency fluctuations. And when the currency fluctuates, sometimes 10, 15, or even 20% in some instances, that has a great influence on that trade. And that is something most of us in our industry has ignored in the past. But that risk is it's high up there. So I hope by sharing information and knowledge within my industry colleagues, it will be beneficial for you, for your businesses. And I truly hope that you will be able to implement some of the risk management and the policies that we have identified into your businesses, thus making our industry stronger and brighter for many years to come. And I would like to open up the rest of the time for a Q&A once again. And I want to thank Tradefox and the affiliates and the services they're offering to our industry is significant. I hope everyone realizes the benefit of having an open platform of sharing information. I want to bring one more thought to everyone's attention. Our business have changed since the advancement of internet. Prior to internet boom, it was hard to identify a supplier and buyer, and margins were high, and there were secrecies in our business. But our business model have changed, has become more open, more transparent. Internet has revolutionized our business. Everyone knows the price, everyone knows the buyer, everyone knows the seller, and there's no more secrecy in our business. Tradefox is bringing the transparency to our industry, being open and transparent with each other, and to share good and bad information of our buyers and suppliers so that we can make intelligent decisions on making trade. Thank you all once again for listening to me. I'll be open to taking some question and answers, or if you want to give a feedback, you're welcome to do so. My name again is Danny Jones from EG Metal, and appreciate your time.
Thank you, Danny. Thank you very much. Wow, that's that's a very, very detailed outline of indeed all of the risks. I don't think you missed a single thing. Very, very informative. We're gonna open it up for questions, and if you will, just raise your hand. At the bottom of your screen, there should be a icon that says raise hand, and we can have you, I can help guide that and put you here in front of Danny. Hopefully we get you up here on the screen with us.
So I have a question on the screen here. Oh, somebody asking on what basis or what do you look for to give credit? So for us, we look at few things. I mean, first is word of mouth with other traders in the industry, looking at credit references. We look at also Dun and Bradstreet, the credit performance. Then also see how much of a advances that the buyer is willing to give based on that. And also we have insurance we have insurance, trade insurance. So that's also another category. Are they insurable? So those are the categories that we look for before making, before giving anyone credit from our side.
Anyone else have some questions for Danny? Just push the raise your hand button. I can turn your mic on. It seems to me there's quite a lot of there are indeed a lot of risk in our business, and there are a certain number of insurable things, but not enough. It seems to me. And you know, it's that's a lot to manage. As a trader, you're really like stuck with probably the hardest job, I would say, if you're trading. Would you think that between, if I can ask here, would you think that maybe you know, an importer maybe experiences this in a different way from an exporter, like in maybe some of the risks that they don't take on, and what those might be?
I'm sorry, can you repeat that again, Chris?
Sure. My question was a little bit of I'm just curious what, in your opinion, you think that an importer, a company that's maybe importing a metal scrap, what risks are they not encountering? Because this description was definitely both sides of the equation, but what risks are they not encountering, or what risks are they taking on out of all these that you described?
So from the importer's side, I mean, they have risk on the commodity pricing side, and also again the currency fluctuation is another important risk factor that they need to consider. Against those are the two normal risk factors that they run into, and also the supply, the quality of the product is another issue that the importers are mostly concerned and worried about. So those are the things that they probably mostly looking for from the importer side perspective.
Thank you. So one hand go down, maybe, but I see Ayush here. I'm gonna enable your mic, and Ayush, go ahead. You'll need to actually, yeah, there you go. You're ready.
Okay, yeah. My question is, like, on what basis do you decide, like, to which buyer you are gonna give the material to on credit, and to which buyer you're not gonna give it on credit? The payment terms.
So, payment terms, again, what we look for in the payment term is, one is their credit worthiness. Then we also review the like associations like Tradefox and how their internal review is within that. And we also look for trade references. Our most important one is insurable. How insurable are the companies? Because if we can get insurance through our insurance agencies, we are willing to give 100% credit because
But
those based on Dun and Bradstreet's and things like that we look for.
if the company, the buyers, they are overseas, then how can they get the insurance from your local insurables? Then they can only get insurance from our, their home country. That's what I mean.
No, that is not true. So if you look at, there are companies that insure overseas and international buyers, and
Okay.
those has to have a good credit rating, because most people tend to ignore the fact that having a good having a good credit, it doesn't matter whether you are based in Europe, India, China, Korea. Having a Dun and Bradstreet is an international firm, and that to having a good credit report and good credit rating increases the ability to have free credit for yourself. And most
Okay.
people ignore that, and that is very important to apply for Dun and Bradstreet or other type of credit services, so that you're showing them that, hey, we're doing trade, we're paying on time, there's no delay. uh, these these things, especially uh, from US and European side, I mean, they do look at that, and because a lot of trades are influenced on that credit category.
So with insurance, you mean to say the insurance of the material, the material only? What else?
No, the insurance is for the company. So the the insurer, the insurance company is willing to give us X amount of dollars. So for example, if XYZ company has a good credit rating, our insurance
Hmm.
company says, okay, you can sell them $1 million worth of goods, and we will, if anything goes wrong on that transaction, we're going to insure
Hmm.
your trade, because we're already paying for we are paying premium for that trade, right? So they will insure up to, example, like $1 million. We can give them credit, and they will be insuring us so that we are protected as an exporter, as a company. We're protected in that side.
So you
So
mean to say the CIF price, right?
CIF, I mean, whichever trade. I mean, say for example, if we're going international, it could be CIF. If we're doing local businesses, we give them credit, sometimes 20, 30
No,
days.
I'm only talking about international. So according to you, if we get a CIF, the insurance from your local country, then only you can think about providing credit and all that stuff, right?
The credit, yes, the company has to be credit worthy. So,
Oh,
like a big company like Gintel, uh,
yeah.
I mean, they are credit worthy companies. I mean, and the insurance, I'm just using them as an example, but we can get insurance on them, and we will be able to trade based on that fact. Yes, and we can give them.
What about the small companies, the middlemen companies? Like, how do you get their, how do you assess their credit worthiness? Like, based upon the insurance? If they get insurance from your local country, then you can give them credit. Otherwise, not. Is it like that?
Correct. I mean, again, it goes back to, we look at one, we look at Dun and Bradstreet. So a lot of the small companies, like I mentioned again, is not looking at, or they're not submitting their financials on a yearly basis or things like that to the Dun and Bradstreet or other insurance companies, right? So a lot of companies ignore that part. So if you build a reputation within like a credit approval, credit rating companies, you will be able to build that credit within the company, and they will be able to rate you based on your performance. You probably will have to submit your yearly financials. They will have their own requirement of what they're going to look for, so that way they have most of the time, small or mid-sized companies, they don't have any records within these uh, credit rating companies. So my advice to everyone who's listening is like, if you're a small or mid-sized company, go to your local credit rating companies and ask them, how do I place my business onto your credit platform so I could submit our financials or whatever they require. There's more than just financials. So so that way they will start giving a rating on your company. So if someone from overseas try to look up a company XYZ and they're not showing up, they're definitely not going to be recommending us credit towards that company.
So are you gonna trust the credit companies overseas? Like if we get the assessment from a local credit company, so you're gonna trust them, and on the basis of that you can work.
Absolutely, because once overseas insurers says, hey, I can give insurance on a company, I'm just going to say XYZ company in India, and they say, okay, I will give you, they are credit worthy up to $500,000. That means our finance is secure. We have no risk at that point, right? We have
Yeah,
managed our risk already by giving, I mean, the insurer, because we're already paying the insurer to
right.
take care of this, and so they will be
Then
able to give that
yeah,
absolute credit to the yes.
yeah, and then later on, like after 1.5 million, then slowly when the trust is built, then you can increase the amount even without the insurance also.
Correct. So then later on, I
Okay.
mean, they can look at the transaction history and they
Yeah.
can increase amount. Yes.
Right. Okay. Yeah. Thank you. It was nice talking to you. Thanks.
Okay. I think Benjamin.
Hi, thanks for taking my question. So the question I have is specifically relating to electronic scrap
Yes.
and how differing European and North American certifications can create friction between trade, despite the fact that they are quite aligned. I'm talking about R2 and We Labex. Both want the same thing. How would you approach um, not either unifying or breaking the barrier that two different certifications bring to the table?
So the big difference when it comes to electronic trading is Europeans have adapted or gone with the Basel Convention rules, which makes it impossible to export any type of e-waste, or we you guys call we product, out of Europe. But from the U.S. perspective, we have not adapted that uh, that policy, and we're still able to go to any countries that are accepting that can accept e-waste and that can process after reviewing the downstream, making sure that they are qualified under R2 process. Once they are qualified under R2 process, making sure that the circuit boards or any contamination related products are managed properly, uh, they are able to, I mean, we're able to export uh, that commodity overseas. So mostly, like say for example, like circuit boards and things like that, most of that is going to Europe or Japan these days. The products that we've seen going export are like hard drive with and without board, like shredder hard drive, things like that. More commodity related power supplies, those are being exported. We in the past, I mean, pretty much everything was exported, but now most of the e-waste producers are really watching what they are, or where things are going. Either they're going either by shredding and separation process is already done on most cases before it's been exported. I don't know if I answered that question, but
Okay. Okay. So from your experience, because I've read all the different documents, EU legislation, WELABEX, that, and they do state that an equivalent system can be acceptable, but getting things from a WELABEX certified stream to an R2 certified stream seems to scare people, or is maybe just not worth the administrative hassle. Um, Despite the fact that I think it is not prohibited by the rules themselves.
That is true. I mean, there is a on ISRI right now. There's a panel that is reevaluating whether to associate closely with uh, European standard. I have not followed through on that uh, much, but I think uh, whether we should follow the Basel Convention uh, rules or not. So I haven't.
Sorry, and between OECD nations, it seems like as long as the receiving recycler has the correct certification nationally and R2, let's say,
Yes.
that there actually are not the same restrictions as the Basel Convention.
Correct. I mean, that's my understanding. What
Okay.
you mentioned is what my understanding is. As long as the receiving and they have proper channel to dispose any toxic material, or they're actually are able to process the circuit board is a major concern for most of the countries, right? As long as they can process that circuit board, I think we are allowed to, and we go, let's say, for example, we go and do independent audit on some of these companies that we're dealing with and making sure that they are handling everything properly. And we also get like from the process, the circuit boards and things like that they're generating, most of them ship back to either Japan or Korea or Europe. So and there are instances where we go and buy their dismantled circuit boards and we get back to our downstream processor for that.
Okay.
Thanks, Benjamin. I have one question. Danny, how do you keep up with all of these, to making sure that you're avoiding all of these risks? Do you have some type of system that you use to just go step by step through every trade every time? Or is it, how do you organize the avoidance of these problems and making sure that you're doing everything and not forgetting anything of all those items?
I mean, see, each department handles that risk assessment. Say, for example, it's for us, the accounting departments looks at the credit rating and who we can approve for, uh, and would trade with on the risk management side. So looking at the transportation side, they, I mean, that department handles the transportation and the logistics side of that trade. When we look at the hedge department, so that making sure that doing X amount of volume on a copper transactions, how much of a hedge are we going to take? Either are we going to overhedge or underhedge, and what's the risk factor there? Because say, for example, what we run into is if we're buying a load of copper and they're only loading 18 metric ton and the LME contract is at 25 metric ton. So we have overexposure. So, so we have to adjust those and see, I mean, we cannot go with a partial, I mean, either 25 metric ton or all or none. So we have to mitigate that. That's where I was saying, like, are we overhedge or underhedge, you know? and what's the risk that we're going to take, and what's the dollar amount that comes to when you're doing that.
Yeah, so you divide the division of the tasks amongst various people on your team. Do they have like a series of checklists, or you just say these are the 6 things you need to watch out for, don't forget? Or
yeah, I mean, we do move quite a bit of containers. I mean, there's no like a set rule, but this is the rules that we have implemented internally, and we want everybody within our organization to follow that rule, you know, because again, I mean, we went through, and during the COVID time, I mean, these were the best things that we implemented, because even though we had a down, like we were slow during those times, we had like, again, what I said is like, there's a lot of good things come when you know, in the times of uh, tragedy. So like, I think this is, again, once again, it's like a good positive impact that we have on our business, and we were able to go back and look at the risks that we are taking, and making sure that we're not making the same mistake again. So so that's these are the we got to look at the bright side, right? So something like
right.
this happens. I mean,
Yeah.
it just gives us ability to go back and look at things in a different angle again. Yeah.
I'll tell you what, Danny, I think this is an extremely informative talk. We've had quite a number of attendees. We will make a recording of this video available, and also, because I know a few people are asking if they could see this the screen a little larger, we can also send out a deck to everyone. So if there are no more questions, the next session coming up in just a few minutes, Nilesh Patel is going to talk about the Indian brass industry. So be sure to join. And also one more small reminder, the session at 1 o'clock with Aditya Kanodia has been canceled. He can't make it. I'll be taking his spot. We're going to have a workshop talking about essentially our vision at Tradefox, and then what we want to really get the input of everybody that we can in the industry, because we can't do it without you guys. So Danny, thank you very much for this presentation. Really, I think we all really appreciate it.
Thank you very much, and appreciate each and every one of you guys. Okay. Thank you.